Hey. Most people don't have a tax problem. They have a lack of information problem.
Ooh.
So today we got the tax expert, Charles Hopkins.
Yes, sir.
And we asking some critical questions here that everyday people need to ask.
Yes, sir.
So they can get the correct answers. Ready to get into it?
Let's do it.
Let's do it.
All right.
Okay,
what
first
you got?
question. All right. So what is the biggest mistake everyday people make with taxes?
Ooh, biggest mistake everyday people make with taxes. Number one, they don't even have a plan. They wait till the end of the year, and when the year is over, you get with your accountant and you're like, hey, what could I have done to save the most on taxes? And literally by that time, it's too late. It's kind of like taking a road trip. And then once you get to your destination, you ask, hey, what's the best way I could have come to get here?
Too late.
It's already a bit late.
Makes
So that's number one biggest mistake. And what was that the question? The number one biggest mistake?
Yeah.
Okay.
I'll take that. Yeah, we hop right into the next question.
Okay,
You don't want
okay.
your arm to fall off. For regular W-2 employees, what are legal ways they may be able to lower their taxes?
Ooh, okay, fantastic. So for a regular W-2 employee, one of the legal ways to lower your taxes is, so the tax, one thing you got to know is that the tax code was reformed. It was rewritten back in 2017 when the Tax Cuts and Jobs Act came out. So that's the first tax bill that Trump put in when he was in office the first time. And then what the Tax Cuts and Jobs Act says is if you have a business or if you have real estate, like basically the code was rewritten to benefit those main things. So if you were a W-2 that worked from home, used to be able to get write-offs and things like that, all that stuff went away in 2017. So what I tell people is you need real estate or you need some sort of business venture, some sort of business deal in order to be getting the same benefits that everybody else is getting. Otherwise, you're going to be stuck playing a different game where you have a very high taxable income. And that's not fun.
Not fun at all. Excellent. Thank you for that. Right into the next one. If somebody has a side hustle, what should they be tracking? Like Uber drivers, barbers.
Yeah. So side hustle, Uber driver, DoorDash, things like that. What ends up happening, you should definitely track all your money coming in and track all your expenses going out, all your money going out. And when you do that, what you do is you track that in something called like QuickBooks. It's probably one of the easiest things. And it'll create financial statements for you. Okay. So ultimately, you want to make sure you track that. You want to also track mileage, things like mileage. Any equipment that you're using in business that maybe was a personal asset, now you're converting it over to a business class asset, you want to track that way as well. So doing things like that is really going to give you pretty big bang for your buck.
Okay, so let's say I was a barber.
Okay.
And I'm cutting hair and I'm receiving cash.
Okay.
How would you convince me? What's the benefits of me filing, obviously for obvious reasons, right? And me not filing? Like, what are the benefits of me paying taxes rather than me trying to keep everything because I'm receiving cash?
Good question. So when a person is making cash, I always say to file. Biggest reason why, it's the right thing to do. Second biggest reason is, let's imagine you need to get a car or a house or something like that, or even an apartment. People want to see that you're earning money. They want to know, hey, if I give this person a loan in some form of way, or if I give them something they're going to have to pay, how do I know that they have the income to even pay it? So one of the best ways to ensure that is when you're filing your cash, they can see, oh yeah, they're making money, they're putting it in cash. And then you want to deposit that cash into your business bank account. So if you don't have a business bank account, get one. And then ultimately that business account is going to allow you to, keep track of things better. And it's a lot more authentic. And I mean, really the best way to do it and the right way to do it.
Of course. Always do the right thing. Yeah,
always do the right thing.
I love it. When should somebody stop doing taxes themselves and hire a professional?
Ooh, good question. So if you end up paying a lot of taxes and you end up paying, I'll say a few thousand in taxes or more, I say it always makes sense to get a professional. So if you have a business and and I'll probably say if you're paying more than $10,000 a year, yeah, you probably need a professional. And you don't legally have to pay if you can structure it accordingly.
Wow.
I mean, ideally, if you pay more than maybe $5,000, maybe you want to start looking.
Yeah, looking for a professional.
Yeah.
Yeah, for sure.
Yeah, that's probably what I'm saying.
Like just dealing with you, got so many tax breaks I didn't know about. And that's why you hire a professional. Like, yeah, I could cut my hair myself.
Oh, yeah. But how good is it gonna be?
But,
Right.
yeah, so you have to
Right.
kind of deal with not being a professional. When you,
We could work on our own car if it breaks down.
yeah, but
Yeah, maybe not.
yeah, maybe not is right.
Yeah.
So I love it. Okay, we got a couple of more.
Okay.
And then we over and out. Okay, I like this one. Everybody talks about LLCs. Does having an LLC automatically save you money on taxes?
Does having an LLC automatically save you money on taxes? No. But what it does do is it puts an extra layer of liability protection between you and the business.
Okay.
So God forbid you ever get sued, taken to court for any reason, well, then the business can stand on its own feet and you don't have to worry about being personally liable for anything. Does that make sense?
It does.
But truthfully, an LLC and an S Corp can write off a good portion of the same expenses, except an LLC is seen as another person, like outside of you, the taxpayer. And the reason why that's important is because you can't do interpersonal transaction, like you can't pull money out of your right pocket and put it into your left pocket and say, hey, I just paid myself for something. That can't work. But if you pull money out of your right pocket and put it into your business's right pocket or left pocket or whatever pocket, it'll count because a business is another person in the eyes of the law and in the IRS.
Nice.
Does that make sense?
It does. It does. Excellent question. I think we got two more.
Okay.
Because I see you switching arms. So I get it. I love it. All right, where are we? Let's talk about real estate property.
Okay.
What tax breaks could be possible if somebody owns a rental property?
So great question. If somebody owns a rental property, a ton of breaks. So
Wow.
basically almost IRS code 162A says if something is ordinary and necessary in your trade or business, then it's a valid business expense. So almost anything you spend can be written off. So almost anything that you spend can be written off.
Wow.
And what I mean by that is like your mortgage interest, your real estate taxes. If it's a short-term rental, for example, you have a maintenance crew come out, boom, it's right offable. Like, to keep up the grass. If you have janitorial staff, that's right offable. Most things like that are going to be right off.
Wow. So you need to get you a rental property.
Definitely get a rental property for
Okay,
sure.
last question, and then we are off and out. What makes Charles Hopkins an expert at taxes?
That's a good question.
Besides the 2 decades of experience.
Right. Besides the 2 decades, I'm licensed. This is my education background in it. I've had a lot of practice because it's like, I guess, what would you prefer? If you're going to get LASIK surgery, would you want to go with somebody who's only worked on one person's eyes before? Or would you want to go with somebody who's done thousands of surgeries?
Thousands of surgeries.
Yeah, thousands of surgeries. That's what I would say too.
Thousands of surgeries.
Yeah. And that's the thing. I've done this thousands of times. Like, no joke, myself personally prepared like over 2,300 returns by myself. So I've been preparing returns since 2006. This is my little bit over a decade in business full time, like when I left corporate America, October 2015. So I think the practice, I reinvest in myself through education, coaching, courses, communities, license.
Yeah. So just so y'all know, if you didn't know this, if you do anything for 20 years, you are expert at it. When you devote your time in the education, when you do over 2,300, that means you put in over 10,000 hours. You know the 10,000 hour rule? You doing anything for over 10,000 hours?
For sure.
You are an expert at it.
Yeah.
So this is great. We got to answer some of the questions that you guys have. We tried to do it for 5 minutes. It's 10 minutes. We don't care. We're here to inform you. Appreciate you. We got my brother Charles, Link, Wealth Without Taxes. Let's get to it. Love you, bro. See y'all
Love you, bro.
later.
Boom.
Later.
Later.